when did it stop working? It's just started working now, so that entire time wasn't working. Oh gosh, all right, sorry about that. Well, let's do that again. Well, that was a nice little warm up. I was trying to go fast and it ended up, I should have checked the levels quickly, so sorry about that. So we're going to go back to the 1 minute time frame. So let's start this over again really quick. 1 minute time frame. We are currently at 10 billion in shorts liquidity that is imbalanced to shorts. As you see here, as we zoom in on the 1 minute time frame, you have 274 million induced 3 times here, and we've seen in times past if they don't close those shorts, they come back to grab them and knock them out of the trade. So these are levels of interest up to 22.5, 22.1, and 21.9. So these bubbles that have been induced that are currently in profit could see themselves aimed at for a bounce to knock them out before continuing lower. I don't know. So that's the 1 minute time frame, which is 6 minutes of data and 10 billion in short liquidity imbalance right now. Going to the 7-day time frame. Never worked at all till now. So everything's good. That's good. That's good. All right. So the 7-day time frame, we basically went down into the 21.5 region, took out $10 billion or so, and went below that to get the rest of the chunk here. And there's still some in the 5 to 7 billion range in this range down to 21.2, but it's has more imbalance induced to the upside here at 23.150, but this is a 7-day time frame, so this just gives you the immediate 7-day inducement pattern here. So moving on to the 1 month, and the 3 month is where it starts to get interesting towards the targets they're aiming at the downside. And you start to see that there is 14 billion just below us at 21.4, 11 billion beneath that at 21.3, and 16 billion at 21.2. And then as you start going into this region, you start to make lower lows on the price action. So at 21.6. So if you start to break this sentiment, then you start to aim at larger pools down below here, which end us up in the 3-month time frame. And the 3-month time frame has these pools which have been generated for, if it'll let me load it, which have been building since February about when we kind of made a higher low here. So you've been seeing these at 21.2, this 19 billion now turning to 40 billion. So they've doubled it up down here at 21.2. So if we start to break beneath this at 21.4, then it's just a hop, skip, and a jump to change the sentiment down to 20,800 at $50 billion down here. So this entire region is caked up nicely to continue on their journey to create a bearish sentiment below and make a lower low for price action here. So if we take a look here, you got it caked up quite nicely all the way down to 18.4. As it makes its journey down below. As you look above, there's single digits in the billions. There was 13 billion at 22.8, and yeah, double digits at 23.2. These were the things we were looking at for that bounce before it goes down, which didn't seem interested in doing. So it's clearly aiming in this region as we stand currently. Go to the 6-month time frame, and we can see the same. As the colors change, the same amounts remain, and you see very little double digits to the upside until you start to get to 24.3. So this is in a sparse liquidity region, and you still see this amount down below, which could be enticing enticing some more. As you look at the yearly, you start to see why we haven't dropped like a rock, because you see the 178 billion, 110 billion, 78 billion, 130 billion, 73 billion, 121 billion to the upside, which has been holding us nicely as a gravitational point to come grab in terms of short liquidity. And this liquidity has been building all the way since August and beyond up to June, as these pools have been on the yearly time frame. So that's quite interesting how these traps lay themselves out and build these liquidity pools, which they come back to and eventually take out entirely. So do they come back and take this out entirely at some point? I don't know, but it's happened in the past and it's bound to happen again. All of this has happened before and will happen again. So how low do we go? Do we go just low enough to create a bearish sentiment and make a lower low and dupe everyone out? I have no idea, but let's go to the 3-month time frame where they're clearly aiming at this moment to see if they go take out that 21.4 and below region. It looks like we're getting that bounce because we're currently at 21.7. So that when they release these $16 billion, that's no small amount of money. So when they release this money here, like the 32 billion that was released at 21.6, it creates a little bounce-a-roo, and then that goes and knocks out those bubbles we saw on these time frames here on the 1 minute. So is that creating the bounce off of this liquidity to go up and knock out these little bubbles to continue lower? We are in the moment of the midweek reversal, Thursday, New York session. So let's take a look. This is the bearish projection on the Binance chart. So you do the 3 clicks. We talked about this before. You click the impulse and the retrace. The amount of the retrace starts to the impulse and the retrace give you your math for where that projection will be. So you have this click here at the high down to the low of that impulse, even though it's not a single impulse. If you look at it on a higher time frame, it could be considered as such. Like if you look at it at a daily, for example, you could consider this just a retrace on the daily and then a impulse on the daily with a retrace to the upside. And so on this daily time frame, you see these projections leading to this. And so if we start to break below this 21.475 region, then the sentiment would be to eat up that liquidity all the way down to here, perhaps, or you look for the bounce at that point. So this is the bearish projection for that. And yeah, let's go ahead and turn on some indicators here and see what we see. So as we saw the daily candle close, it was 6 time frames oversold. In times past, we do see that, but sometimes we get suppression if the higher time frames are playing out. One thing somebody pointed out in the Momentum Master Discord, shout out to Peyton, he was saying that the 5-day cross closed, and this could be the possibility of that kind of momentum shifting on you to the downside. Now, if I look back in the 5-day, it is a larger time frame. So how many times does this cross over and cross under? It's not as frequent. So is it as significant? It does play out from here, from November 2021, and then we went down from there. So is this the type of thing we're starting to see, where we saw this on July 2021 and then it went up? November 2021 we went down, and February 25th 2022 we went up slightly, got the crossover after the fact down here, and then we continued to the downside, kind of started to meander around here, got multiple crossover, cross under, crossover, went up. Now we're getting the cross under to the downside on the 5-day chart. What are these things with the DNA helixes? These are baselines on Momentum Master A. What are the baselines? They're the only leading moving average formula that has been known to exist. So they are leading moving average formulas, which when they cross tend to bring about momentum shifts, which is why they're in the indicator titled Momentum Master. Link in the description for more. You can check out all of the schematics and how these things play out in more detail. If you look them over, you can toggle them and look at them in a nice way. So let's take a look at the 4 hour. So what we glossed over too quickly 2 days ago when we were looking at the idea of it going up before it went down, what we missed, which we didn't miss on the S&P and called that perfectly, but here we missed the bearish divergence on the money flow here with a hidden bearish, and then it started to play out where the money flow started to flow out from that point. So this money flow bearish divergence would have had you at hello in terms of it's deviating from the RSI here. You see the money flow coming up, RSI remaining flat, and so it gravitates back to the RSI. This happens on more than one occasion where you have the money flow go beneath the RSI and come up, goes above the RSI, comes down, and you get these bullish and bearish divergences which play out on these higher time frames like 6 hour and above. So you get the bearish, it goes down, bullish, it goes up. You're getting bearish, severe bearish, hidden bearish, and then it went down. So if we look now, we are currently oversold on the Williams and the stochastic RSI. If we go to the 8 hour, also oversold on the stochastic RSI and the Williams. If we go to the 12 hour, oversold on the stochastic RSI and the Williams, and the RSI is also getting into a green position with the money flow, which is nice to see. So you're getting into that mode of that potential long area. We did see that money flow divergence on the 12 hour that locked in, and then it immediately did the liquidity grab. Is that the liquidity grab before they send it, creating the shoulder, head and shoulder idea out of here? The Williams is saying yes sir, and that's the 22 hour, the Treasury 22 of yours truly, and same is occurring on the daily time frame. So the weekly is the one thing that's giving you that nasty downward sauce, and you're getting that down to the 78 region. We're getting underneath the overbought status. Is that to kind of go up a little bit more once we dip into this pool? I have no idea, but it's nice to speculate, isn't it? You're starting to get the curve on the cloud here right around that 618 region of here. When it breaks through the cloud, what does it do? It comes back and kisses it. This happens on all time frames because everything is fractal in nature. So you'll start to see these things play out on all time frames. You go to the bottom of the K-hole, better known as the Keltner channel, which is also included in Momentum Master. You get to the bottom of this, you're generally going to start gravitating back up. You get to the top of this, you start to gravitate back down. You break through the cloud, you come back, you retest it. This is just what happens. So one thing that to note for the weekly time frame is you were previously overbought on the Williams. You reached down back into that. There's nothing to say that it needs to reset fully, especially if it meanders around like it does back here. Is that the case? Conditions in the world markets and the world in general are very different than they were back here when people were deluded and in lockdown. We're not as deluded and naive anymore, so maybe it might not be that similar situation. So let's go to the 2 week and see. One thing to note on the 2 week that was nice for Momentum Master was we are starting to see this golden cross of the Williams, the rising sun as we call it. Last time that happened was on March 18th of 2019 before we saw a run up before the breakout here. So are we going to see a similar thing occur? It's only happened once before, so it's a new kind of thing to see, but we are overbought on the stochastic RSI, which we were also at that region over here. and we still continued higher. So that's something to think about. So going back to the 4-hour time frame, we looked thoroughly at the higher time frames. The 4-hour time frame is oversold on both the stochastic RSI and the Williams. We're starting to see that kind of nice bounce starting to occur from the message you would have received on your phone from Momentum Master Ultimate. What is Momentum Master Ultimate? It's this thing here that gives you these symbols, and these symbols represent exhaustion points on multiple time frames. 6 to be precise on this symbol here, which is layered. It's 3 different symbols layered on top of each other. Circle for lower time frame, diamond for medium time frame, the X for a multitude of almost all the time frames. So when you get them all in conjunction, it's saying nearly all the time frames are exhausted here. Might be a good place to consider a long. And as we talked about yesterday, buying in the premium is not a good idea. You buy at a discount. We are currently reaching below the 0.5, which is the equilibrium point. We're reaching down into the discount regions of the entire range here. So is that if there was going to be a bullish continuation, here would be the point where it would occur at these regions just off the cusp of this pool here. So despite having all that liquidity below, if it were going to continue, there would be the idea of dipping into this pool to disguise the positions of the whales as they decide to send it up further. If that is the case, that will occur. It will either occur at this region or just eat into this pool right here. But generally, you don't want to establish positions of a short down here, because this is the place where they absorb that liquidity. You once again, you buy at the discount and you sell at the premium. So you'd be looking for ideally shorts up here when we have these nukes occur, when we are overbought on all these time frames, and you would also receive alerts for those as well. Just as we caught the bottom of the rocket ships down here, you know, we had this documented and everyone in the Discord notified about it. Just as we caught these rockets down here for a positional trader, you'd be looking for the escape up here as well. So if you were looking for some sort of continuation idea, this would be the place to do it, not to short this region at all. So we're just surgically looking for that position ability to occur. So this is where you see the crossovers on the 1 hour, and you start to see if it cascades up and you meet resistance on the cloud and you come back down again. So if you were to enter here, you would be monitoring the stochastic and seeing how it reacts to these clouds and the ATR regions up here. The hourly is seeing some momentum to the upside. The 15 and the 5 are overbought. The 4 hour is also starting to get, it had a close which gave us a little bit of juice to the curvature to the upside. The green is also looking nice. So this would be a place to occur, but we're not seeing divergence just yet. Normally you like to see something like this. So I went back to this last time, where the reason I was so dead set on this continuing here was because we had money flow divergence. Let's just double click it here. So we had the money flow divergence on the 4 hour, and we had the RSI divergence on the 4 hour. We had this very clear divergence that had been locked in, bullish divergence here, where we were making lower lows, yet this was getting inserted here as the positions were being disguised as they entered in. So I was dead set on the idea of upside because it was clear that there was bullish divergence, and it had also occurred here, and they continued to make that liquidity grab. So they get the bullish divergence locked in, it triggers a liquidity grab / stop loss hunt, and then it created more divergence, which then surged out, the W formation. Wendy's and McDonald's for days. So are we doing the same thing? We didn't really see any bullish divergence. We had Class C at best here, and we're still starting to see Class C at best. It didn't get locked in though, but we're seeing that lower low on price action, and we did talk about it being locked in on these 6 and 8 and 12, I believe it was. Once again, thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. So we had that bearish divergence on the 6, but on the 8 and above, we had some bullish divergence that locked in back here only once, and then you got the bearish divergence on the money flow up here alongside the 12-hour, the 6-hour, and you had that 12-hour that played out here, but we meandered around. It didn't play out, and then they took their positions out. So we're still not seeing that divergence just yet. The liquidity grab is a really good one. So I'm not quite sold on this level right here. I'm not sure why we bounced exactly at this region. Like why exactly at 21.5? I guess it's the round numbers of the 500s, but why 531? I don't think there's anything over here necessarily that is noteworthy to look at. Let's go take a look at where we stand on the dollar and the S&P, and then we will go back to Bitcoin and bid you adieu, or look at some altcoins that you're looking at. So we had the dollar. We said the dollar reached up into this 1, and if you can't maintain this 1, then you're likely to retrace down into the 786 region, which we are doing. I haven't changed a thing since yesterday, and this projection was up here at that time. So we've started to quite nicely fill out the projection as stated. So are we going to go down to the 786 of this bullish projection trend-based fib extension tool that was from 3 points back here laid out for you nicely? Are we still going back to that 786? I have no idea. I just look at what the math tells me. So we're looking at the 4-hour going down. The 4-hour is coming down quite nicely. Does it continue to come back down with the hourly? It would look for that SR flip as we talked about. You would come down to that region and bounce off there, but until that point you could technically bounce off of this region we're at right now, but we've currently broken beneath it to show that's not the case. So yeah, that's still for the dollar in potential retrace mode. And even though it was retracing, the Bitcoin still went to the downside, so it totally didn't find its reprieve off that, because the hawkish stance of the Fed was still hawkish. So the thing about the S&P though is the S&P did retrace back down into the 618 region, and we said it would meander around, possibly go deeper into this golden pocket region, which it did. It found some relief off of the 706 golden pocket region of that, which also coincides with the 1618 of the trend-based bearish fib extension tool. So you got that confluence on confluence right here for that bounce, and you're seeing the hourly and the 4-hour and the 15 and the 5 reach into a nice state where they could possibly continue to go up. Let's see. It would possibly get rejection off of the 1382 though, and that would, if the dollar retraces back to that 786, it could do something like it could get up to here to only meander around and continue lower, or it could break out and go up to here as well. So it depends on whether the dollar gets that bounce at the 786 or not, whether it stays down in this region. In terms of stochastic, why is my Momentum Master not loading? Load, will you load? But you see how we got, I mean, it ends up being a support structure anyway. You don't really need the support lines if you use the Fibonacci. It tends to be these like weird gravitational points anyway. So we're above the cloud on the 15. What do you do when you break above the cloud? It starts to turn, you come back, you kiss it. So are we going to maintain this adaptive and just continue higher on a higher time frame play right now, or come back and kiss the cloud? So you could come up higher and then kiss the cloud at another point, get rejection off the weighted moving average here. Let's look at a higher time frame here. Also coincides with the cloud here. We broke through it, bearish retake, continuation to the downside in that regard. We're beneath the adaptive and the weighted here on the hourly. Why is my ultimate not loading? Not sure. Let's check the comments real quick. Gang, can't hear your voice. Yep, can't hear you, blah, blah, blah. Good now, yes. Never worked at Alton. Oh, nice. K-hole, lol. Love that Williams indicator. What's up, guys? Alright, so now we're getting some. So you'd also reach the outskirts of the cloud, which also happens to coincide with the hourly cloud itself. So you could get that. You're seeing no abating of the downward momentum here. So this is why we got the rejection here and came back down. Okay, so yeah, that makes sense. The 4 hour could curve here at the 50 or just continue down at this point. You have that downward momentum. You could come down on the RS, and this was the thing that we told you about like a few days ago. We were talking about possibly how it could have held here at this adaptive, and if they mustered the strength, they could have continued higher. But I said it's a premium. You wouldn't want to buy here anyway, and you had the alarm cross on the Williams. So this is why, even though the stochastic the SRSI was low, you had the Williams telling you an alarming fact of reality, which was you're likely to fade here, and sure enough we did, and we had that projection laid out for you perfectly. So you have the Williams in a nice pocket here on the hourly, so an hourly play could coincide here for the retrace on the dollar and the S&P. So we could see a relief bounce of some nature. Where does it fade is the question. So where does it fade indeed? So you could come up here and get rejected off of the adaptive region, the ATR adaptive region on the hourly, since it's an hourly play. So you're seeing the MACD about to cross. The Williams is in a good space now. So this would be where you would think about it. And it also, we put that idea out for you yesterday. If it would meandered around in here, this is the golden pocket region for that idea to take the chance of a long. It's the discount region of that local fib level. So you look at it just from a discount perspective, that's where you long, and then you start to get out of that discount mode, and then you start to sell off into profit. And then you come back for a possibility of a continuation idea. So this would be your shoulder head. I don't know if you would call that a shoulder, but because we already broke out by the looks of it, but yeah, it's a pivotal thing for right now. So let's go back to the BTC real quick. And this once again coincides with the liquidity for Bitcoin. We can't really see this on the stock market, so it's nice to be able to use high block as a way to gauge how liquidity is induced and where does it end up getting locked in and where do they end up coming back to eat this liquidity. So we started off the beginning of this with the mic muted, but we were talking about how they had 21.9 here, 274 million, 3 times over, nearly $1 billion in short liquidity just chilling here, not paying themselves. So likelihood of coming back to that region and knocking them out one by one is the case. So they would come back to 21.9, it would create the flag, which then absorbs it, creates your bull flag, whatever you want to call it, the absorption point of that liquidity, and then you start to traverse higher, and you start to traverse higher. So is this the point where we start to traverse back into the short liquidity? This is where you would start to see it if you were to look for this minus 9.9 billion cumulative short liquidation level delta that is occurring on this 1 minute time frame. We did look at the possibility of it going down to the 21.4 region. If there were to be a divergence, it would be where you would start it here. You would retrace to the 50% level. So you could take this, put it into a pocket, and this rejection point for that liquidity grab would be to that region, which would be 21,922, which would coincide with, yeah, that would coincide with that bubble quite nicely. So if you want to get an immediate 618 rejection of this play, when they knock out that long, then you could kind of see some sort of rejection on the cloud here as it comes up to the 618 and knocks out that 274 million. So it will come up to this guy. If it knocks that guy out, if and when they do, it will flag out in some manner, and you could see whether the play to the upside continuation idea is real. If it is real, then it will start to thin out this cloud, and they'll break through it and then retest off the cloud. So if it is real, what they'll do is that it'll come up to here, get rejected, come back, break through, come back through, and continue again higher, and it'll create a shoulder, head, kind of inverted head and shoulder out of here. I don't know how the complexity of that will look, but it will be something in this manner. You have the shoulder, head, and shoulder idea out of here. We tried to put out the idea of that yesterday, and it didn't occur. We said look for the rejection off of one of these fib levels, which we did. We had the rejection twice at the 706, and it went to the downside. We said rejection at the 706, look out below. If you don't believe me, here is the message that we put out. If you're not following the Momentum Master free Discord here in Rainier's group, I don't know what you're missing, but it said rejection at the 706, look out below. That was yesterday at that time, and sure enough, we came down from that point. So we got it at that point, I believe. Yeah. So the 1 hour is the play right now, it looks like. So how far up, and you're getting that rising sun love on the hourly here. So how far up are we going to go, and where are we going to see the rejection here, if there is a rejection? So we look at the 15-minute. So we couldn't really see that, but you could just see the crossover point. So we did start to see the cloud thinning on the 15-minute. You were meeting with rejection on the cloud. It came back down. The cloud's starting to wane. We broke through it. We're reaching the top of the Keltner channel. Do we come back and kiss that and then go? On the 15-minute, as you change time frames, the amount in which these things aren't as precise, you do see these kisses, but it's more significant, let's say, on higher time frames. It's more of a solid thing to see, and when they coincide with these Fibonacci levels, then it's also more noteworthy to see those regions coincide. Yeah, so this is where you would receive these on your phone. Like, if I turn on the history for this, I like to put the history on, but I would imagine for someone who doesn't know what Momentum Master is, this gets a little bit busy to have on, so I've been turning it off for your guys' sake. But what it does is, if you show the history, it's going to show you everything. Let's just make sure this loads properly. If it will load, come on, please. There we go. So you would have gotten each one of these little alerts, let's say, and then, like, let's say you were just fiending to trade and you had no idea about take a percent here and just frugally get out when you get the 2 time frames over bought idea, and then you could test it again. And so over time, you'd just be able to take a percent here, a percent there, and these things look insignificant because it didn't go super high to the upside, but a percent is a percent is a percent. And so you could basically compound these things as people in our Discord are doing and looking to get funded off of this idea. So this is what you're seeing here. You're seeing while everyone's getting bearish, you're getting these 6 time frames oversold multiple times, telling you that there's a potential to reverse here. And we've been talking about the idea of kind of going up at some point to knock out some shorts. We are aware of the liquidity below. We're not naive enough to say that it's 100k inbound or anything, but what you're trying to look for is these little points to capitalize on, to increase your capital. And you look for the baselines to come beneath the price, and then you look to see it scoop it. And it's same thing when it fatigues, like you get these coming under the price, it goes up, and then you just move your stop loss into profit. If it knocks you out, so be it. But you look for this type of idea where it's coming beneath the price, and then this is kind of messy, so you wouldn't take that trade. So you'd look for that same thing to occur again, coming beneath the price, take it up, coming beneath the price, take it up. And these things occur over and over and over on multiple time frames, and it even occurs down on the 1 minute, and you can watch that cascade. So you see it coming beneath the price, it comes up, coming beneath the price, it's coming up. We're reaching the top of the Keltner channels here. If we go to the 5 minute, let's look for some. So let me turn off the history for you guys. I think you got the idea. So let's go one last time to the dollar and see what it's doing. It's still filling out the thing from yesterday. Still coming down to that point. And the S&P looks like it. What did it do? Possibly getting that rejection off the adaptive to come down, to be precise about it, come down to there and then go up. And then that would be your shoulder, head, and shoulder out of there. You got the 15 overbought as well. So you got the 15 minute wanting to come down on you. Shoulder, head, shoulder. So you chill out here, and then that means Bitcoin would also start to chill out. But it would have to get up to that 618 region. So like this is where you would be precise. Like you don't FOMO, you don't see this red candle and go, oh, I gotta sell, or I gotta short, or whatever. You chart it out using math, and then you make sure your idea is sound, and then you should enter that, if you're so inclined, off your own analysis of that, where there's no emotion involved. You're just seeing where the liquidity is lying, and it coincides nicely. And you can go back and check where we've seen bubbles like this occur, and they go up and they grab it, and then they come back down again, and then they go back up to get the next bubble. So you could ride those liquidation events and scalp if you like. Once again, this is not financial advice, this is just entertainment purposes and all that fun stuff. But yeah, this is a midweek reversal Thursday. So the week setup, normally Monday, false move Monday, Tuesday, Wednesday, the move for the week, and the move has been to the downside all the way through Thursday London session, and now we're reaching into Thursday for New York. Is New York the one to reverse it? Where are they going to reverse it? Is this going to be the point they reverse it? Are they going to come back down for another liquidity grab and double bottom here? Are they going to do something like this and then come down in here and then go out? We did talk about that extended W pattern, and so this could be just the extended W to go out to lift us out of here. And this could be your shoulder, head, and shoulder out of the region. So you get to a certain point here, and then you start to have like another shoulder out. Is that the idea for a longer term idea out of here? Getting this liquidity, tapping this one last time, getting people ultra bearish, inducing the most amount of longs. Like, the idea of like a V-shaped is not what you're looking for. You want that double bottom action, and you want that divergence. So you want to see it come down into here, creating like a lower low. And let me turn off the stochastic thing just to be, we'll turn off the ultimate rather. And then, so you want it to kind of make a lower low into this region, ideally speaking, and you'd have like a lower low, right? And then on the price action, you'd be having like, positions established, and just how we got some divergence here, you'd be getting divergence there, but you'd be hoping to get it on like a 4-hour time frame or something. So you'd be looking for the money flow and the RSI to kind of be doing something like that. And then you'd be printing these you'd be getting these double bottom divergence ideas. And then we could see ourselves come out from that. Just spitballing that out there like that. We'll see how that idea plays out. But you got that 618 of this local fib region. And if we take the fib tool, if we just do a fib from, let's just do a fib from here, okay? Yeah, that happens to be like a 618 region from here that we bounced off of before. So this confluence region zone that we're at, this is probably why we have the dollar value that we do down here. Yeah, so this dollar value that we have here where we bounced happens to be a 618 region of here. This is quite interesting. So this impulse to the upside here contains that fib pocket, that bullish order block that we tapped into a little bit with the 6-6 region of here, and now we're bouncing off the 618 region of that. Something to note, to say the least. Do we come back into this pocket a little bit deeper and get people a little bit freaked out a little bit more? I have no clue. But all right, I think we did a solid analysis here for where you could see like a possible rejection and where it would go thereafter, and what kind of bigger projections you might look to see in terms of a reversal. Pretty cool. Is it my cute, or is the lights you drop out for you and then come back? Yeah, that's probably the connection that I'm on. I have like a kind of like a share, like it's not shared, but I own a mansion complex, and they call it mansion in Japanese for some reason. It's not a mansion in English, but it's like a condo, if you will. And so they share the internet with that condo and the fiber optics. So it's not the best thing in the world, so we used this other company to get the stream thing up. Long story short, it's not the best like streaming thing. My computer is the best you can get, money can buy, but the internet connection itself kind of jitters a little bit. Sorry about that. Is there anything you guys wanted to take a look at before I head out? Anything at all? At all? So just to reiterate one last time on the 1 minute time frame where these pools are located, you do have an imbalance of shorts in the immediate 1 minute time frame to retrace at least a little bit back to. You have the 274 million at 21.91. You have another 274 million at 22.14. You have another 274 million at 22.57. These large bubbles are screaming, take me, because if they don't pay themselves, that's what it does. And so it goes up to these regions and pops them and then retraces a little bit into it as it absorbs and sells off their own positions into their liquidity. What is their liquidity? You have buy side and sell side liquidity. Shorts end up buying at that price, which a position sells to them happily, and that's where you see the flag come out. So you see the flag come out here again, and then it will go up to their buy side liquidity, which they buy at a loss, and they sell it to the seller, which is the positional trader, which happily sells it to them at a win, which is normally a market maker or an exchange. So you look at these smart money concepts. What is buy side liquidity? What is sell side liquidity? What does it all mean? What does it all mean, John? What does it all mean? Yes, yes, yes. Once again, you were seeing some Momentum Master indicator. What is Momentum Master? You can look at the link in the description. It'll take you to a nice web page, and it will give you can look at the schematic here, and you can toggle on different things from the Momentum Master Ultimate. You can toggle everything, or you can look at one single thing. Be like, okay, well, what is that formula? I see, that's what these diamonds and stuff are. Okay. The trend cloud, what is the trend cloud? Okay. What is the strength? Okay, oh, the Williams. What was he was saying? Williams, what is that about? So you can learn a little bit about what we're going over and what indicator we're using, and then find out if it interests you. And we have a Discord of people looking to get funded as well. So shout out to everyone in the Discord, and shout out to everyone that supports the stream each and every day. Thank you so much. Once again, thank you for sharing your essence in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, taking you and yours to the upside. I hope to see you all on the next live each and every day. We will try to do our best to give the smoothest positions and predictions for price. Thank you very much, and I will catch you on the flip side. Peace.